Kitco News special coverage of the Vancouver Resource Investment Conference is brought to you by Snowline Gold.
Hey everyone, I'm Szafron. Welcome back to Kitco News. We are at the Vancouver Resource Investment Conference, and there's a ton of energy in the room. Of course, you know our next guest, E.B. Tucker from the Tucker Letter, joining us here. Thanks for being on the show.
Thanks for having me.
I'm excited about this because we were talking a little bit off camera just before about the attitude in this room. I mean, we've been hearing it's going to be a commodities year for a year or two.
Or 10.
10. Where are we now? The optimism seeming to be shifting.
Maybe it's what people can't see on camera is that they wall off the part that's not being used, so it always feels big.
Yes.
But I've been around this for a long time. In 2010, if anybody was involved back then, it didn't matter which stock you bought, it went up, and so you felt really like a genius. So I mean, everything you did, you felt smart. And it's been a long time. It was 14 years ago.
Yeah.
So I think I'm not as convinced. I mean, I feel like I'm a little burned out on it. But what you need is money coming in. Now, I just want to put this into perspective. Newmont Mining is the same size as Hershey by market cap. So you can buy Hershey or you can buy Newmont. So you can buy chocolate bars or you can buy gold bars for the same price. And I just passed on a deal that came on my desk to buy into ChatGPT's parent company, OpenAI, $85 billion valuation. For $85 billion in the mining business, you get Newmont, Barrick, and First Quantum, which is like a substantial part of the gold and copper production in the whole world. And so I think what people miss here is that the world's gotten really big and the mining business has gotten small.
Right.
So you go back to the 90s, the Fed balance sheet was $400 billion. Today it's $7.5 trillion. It's been as big as 9. It's going to go to 7, by the way. It's the magic number before it turns, just to let you know, a little teaser, this was going to happen. But my point is that the gold business, the resource business has gone, the speculative side of that business has gotten drastically smaller. And it needs you need to see new life coming in. And I think if you don't see that, you can just wait because everybody needs a little bit more money, just get right over that hill over there, but they're not getting over the hill. And so I think you can be patient. You can just say like when this thing turns, like you don't want to go fishing for one fish. You want to fish in the fish when they're running. And it's really easy to fish. It's fun. There's a lot of action. There's a lot of adrenaline. Here, it's like there will be one of these companies maybe that goes, but it's like, it's too much work. I mean, is 99 failures, 1 success? You're like, this is bad odds. I mean, in a bull market, like that 2010 bull market, you see the ticker symbol. You're like, I don't care what they do. Now, 2016, we had a brief bull market. So you had 6 months. Still kind of a long time. You don't have to act like today. And some stocks went up 1,000%, even some stocks that were literally garbage. But we're still waiting for that, and I don't think it's now. I mean, I think like you're going to see gold. Gold's obviously like looking really nice right now, and I think it probably moves up to 2150 this year, and that's a new zone for to trade in. But it doesn't mean that there's money coming in looking for like the production side of the business is totally left for dead. I mean, I hate to say it, but it's like you look at these companies, they're low debt, some of them pay dividends, the big miners, they're just under-owned by institutions. It's really bad. I mean, it's like really, you wonder, like, do they know something that we don't? I mean, yeah, because like a lot of people that are here talk about the 90s, they talk about the early 2000s. We had these bull markets back then. I mean, you don't have that right now. It's like you don't have it. But meanwhile, the size of the world system has gotten massive.
Yeah. It's definitely gotten massive. And when you look at the way that the industry is working, in terms of retail investors, a lot of them obviously not buying stock right now. When we're at this weird supply chain crisis within precious metals right now, we're obviously in that. Is this going to happen this year? Like, what's the forecast for the next year or two?
The miners, to me, like I grew up in the American South, you have like these sharecropper farmers that just struggle from season to season, and the Dust Bowl every now and then knocks them out. That's what I feel like the miners are. I mean, they just keep going, right? I mean, they just keep pulling this stuff out. We've seen all the graphs on there's no supply and all this stuff, but they keep pulling enough out to satisfy the market. But meanwhile, the gold market itself is highly financialized. Like you've got half the annual production turns over in the futures market on a busy day. Think about that. It's like half a year's production in one session. You've got options on futures. You've got hedging and all this stuff that goes on. So you have a massive financial market that's underpinned by a teeny tiny little production market. And so I just see people, they make these comments like, oh yeah, the supply thing's over, but it's like, I don't know, I really don't see it. I mean, and don't get me wrong, I mean, I'm not negative about gold. I think gold is like a portfolio without any gold is in big trouble. And the reason why gold's so important is that it's kind of like, why should you own a house? Well, not because you're gambling on the house, but like they've created this system where you just got to own a house. I mean, the long-term trajectory of gold, you know, of a house, of Bitcoin is up. It's up. I mean, like, period. It's up. Like, I bought coins when I was starting out working, $400. Now they're, you know, it's like 2,200 really for a U.S. Eagle because of the broker charges and stuff. But to me, it feels about the same. I mean, it feels expensive and it felt expensive then. And you see how you get lost in the day-to-day.
Right.
They kind of like put you in this washing machine of news. But the big picture is that it's going up.
Yeah, yeah. Well, for a retail investor looking for guidance, you start to see these fundamentals start to take place in front of your own eyes.
Yeah.
What do you advise them? I mean, silver hasn't really had a breakout moment here.
No. So a lot of people are confused about what I do, which is I find very funny. I write a newsletter called The Tucker Letter, and you can subscribe at ebtucker.com. You can read it for free if you're like new and starting out. There's a big section that's free. I run a portfolio in that on behalf of a trust where I'm a trustee, which is a job that I can be fired from. I'm trying to explain to people, you don't want to like have 10-to-1 moonshots in the trustee portfolio, but you also don't want to underperform the market. Your goal is to catch the trend, you know, and ride the trend. And so I think people that are running around here, what they get wrong is that they think I'm going to find this 10-to-1 thing that I'm convinced on. I'm going to convince myself. I'm going to make the Kool-Aid with one hand, drink it with the other, then I'll put all my money into it. But what you and I know from being around here for a long time is that like your 10-to-1 shots should be proportionately positioned in the portfolio. And your goal is to, even if you have a small amount of money, you don't want to go re-earn that money. So your goal is to participate in trends as they emerge, to beat the average, and to have exposure to some big potential upside deals. And you get those in periods of down like now.
Right.
So if I were advising like my son, you know, who I don't think will be interested in this when he grows up, probably because it won't exist. It'll be some new thing. But I would say, like, look, what you do here is homework. You know, you don't like run around with your wallet open. You build yourself a little list, and then when it's time to make a move, then you go back to your list, and that's how you move.
Yeah, due diligence number one.
Yeah.
So when you're looking at the majors here, I mean, we have a lack of capital coming into the mining market at the moment. Is there going to be a place of consolidation taking place?
Well, so, all right, look, I got to tell you, I get asked, I have a lot of connections in this business. I get asked by New York friends sometimes to like, you know, my friend here wants to see a gold mine. So I got asked to take this guy to a gold mine last year, and we turned out to become friends on something. It's like super high-powered New York major. Never seen a gold mine, but it's probably must have traded trillions of dollars with the gold contracts.
Right.
Anyway, so he was like telling me, he's like, I really think these gold stocks are cheap. And I was like, well, there's one thing to remember. It's more important than any other thing you're going to learn. Don't forget that you're in a graveyard. And he's like, what do you mean? I was like, there's a yard full of tombstones of people who also thought that it looked cheap.
Yeah.
And he was like really puzzled. And I was like, what it means is that they are cheap, okay? But you have to make sure you invest in a way that allows you to be here when they move.
Yeah. Yeah.
Some of these things, like 3 years ago, you thought there's no way it can get cheaper. They got cheaper.
You did. Yeah, well said.
Look at First Quantum.
Yeah.
I mean, not exactly a basket case, and this is an event beyond its control to some degree. And you know, Franco's been affected, and Franco is like the Michael Jordan of you know, investment options in the gold business, and
totally affected.
Yeah, it's a big deal. You know, and so this type of stuff is happening, and that's not even tied to the actual market. You know, that's like an exogenous kind of circumstance.
Right.
But
most people looking for those 10 timers, though, something that's an opportunity where, yeah, you might have a couple of failures here and there, but you get that one.
I have had some big wins in Vancouver. So like Vancouver to me is like a magical city because I've had some spectacular events happen from being involved here, and you really got to be here. Like you got to be in the room to be in the deal. You got to be in Vancouver to be in the room. Okay, that's where the room is. You can't do this from like some island under a coconut tree, right?
Yeah.
And I can tell you 100%, every time I've had a massive like win here, there's been more than one. It's been like an accident. I mean, it's been, when I look back on it, it's been like, well, you know, I'll do the deal because you're in it, and I don't know, it seems cool, and you know, we'll see.
Yeah.
But I might be doing 5 like that, you know, because I'm kind of,
yeah.
And so you always look back and people say, yeah, well, if you had put like $3 million in there instead, and you're like, does it work that way?
No, yeah.
It doesn't work that way. It's always the ones where you're like, I'm a little nervous, you know, so I'll kind of like be reserved.
Yeah.
It's those that go. And so I think people should know that, you know, it's like, this is money, man. I mean, this is hard to earn money. You know, it's like, it's not easy. If it was easy, everybody would be rich. And so when you start looking at these big upside plays, I mean, I am like never excited, just to be fair. I mean,
Sure.
people that know me will know that I'm like the biggest, I'm almost like it could be a bond investor. You know, they like start out from a place of being super negative, you know, and then I'm just like,
Fine with the 4% a year.
well, I'm just like, I know it's going to be bad. Let me just figure out how. So I kind of go into everything with that, you know, and it doesn't work well for relationships. I'm just kidding. But I mean, but my point is that it's not entirely unhealthy because like you keep an open mind as well, but you don't like run around thinking like, I've got to get as many 10-cent shares and 15-cent warrants as possible, because you come back next year and they can be 5-cent share and 10-cent warrant, and the story sounds even better. And what happened with your money last year? Well, it's up in the Yukon in the ground somewhere.
Exactly. Okay, well, let's get into the evolution of money markets. I mean, your recent letter, we were talking about Bitcoin spot, Bitcoin ETFs, them being launched, and you've kind of come in and changed your perception to the Bitcoin community. So give me a price forecast on Bitcoin, why you're entering it, what percentage, and why.
Okay. So there's a lot going on here.
Yeah.
All right. So there's a lot going on here. So first of all, I have the weirdest take on Bitcoin, because I mean, like, nobody understands. I'm going to have to write like 50 newsletters because people, I must not be communicating well, because I see it as like this thing that you really got to own, you know. And so when I look at the portfolio, let me just speak for the trust, because I already bought it. You know, when I first read about it, I bought it for the trust. I bought Grayscale. And so, which is not the best way to do it, but it's easy. It's good.
That's why
it's expensive.
That's why they're there.
It's expensive. It's really big. It's going to transition to being a NYSE traded from over the counter. And
interesting.
Yeah, it's happening. Kind of, it's in the works right now. But anyway, the point is that I don't think it matters really if you get like 20 basis point fee or 150. I don't care. And I also don't care about all this lingo, man. I'm reading this lingo and I'm like, what are you guys even talking about? It's the equivalent, like I own lots of gold, but people don't understand that like the gold has a place in the portfolio to smooth out returns.
Of course.
And I don't see Bitcoin as that volatile. I'm like, you look at this chart, I'm like, okay, this is not that volatile. I mean, look, the thing is moving up, okay? So like Bitcoin and gold, I think have a place in the portfolio. So if I take, a dollar that I'm gonna invest for the trust, I probably have like 5 cents gold and then like 3 or 4 cents of that dollar in Bitcoin.
Okay.
And that's the way I see it. And then I read these comments from people and I'm like, you guys, I mean, if I was taking gold around town, buying groceries with it, I mean, there would be psychologically something wrong with me. And it's the same way with Bitcoin. It's like, it doesn't really have anything to do with anything they're talking about. And then they start comparing it to all these other coins. There's 13,000 coins. I think tokens, I think most of them are worthless. I don't think they matter. I think a lot of the people that are involved in Bitcoin are never going to make any money because they're so ideological and strange that they don't understand what's happening.
Right.
Okay, price prediction. All right. So the gold,
tell me what's happening.
I'll tell you. So the gold market, all right, so you take like the world debt, say you're at like 300 plus trillion. This is a giant pile.
Huge.
And then you take like $2,000 gold, it's worth like 13 trillion-ish, maybe 14. I don't know. It doesn't really matter, but that's about the size. And then you take like $42,000 Bitcoin, is less than $1 trillion. So you're like, okay, well, all right. So gold is really important, right? So because you own Bitcoin, to imply that you would not own gold is like really crazy. I mean, I don't understand. It's like if you own semiconductors, you would not own, like some food company or something. It's like no correlation. So I see the gold price this year, 2150. By 2030, I think the gold price will be $5,000. Okay. Wow. Yeah. So that takes you, to like 30 trillion Gold value, right? Well, what is the value of Bitcoin?
Is that just a pinch? What's getting it there?
I just feel like people that think they're gonna wake up one day and it's gonna be like 5,000. I just don't think it works that way. And the reason why is like when it went to new high in Asia overnight in December, I was watching it. So I was on the Bloomberg when that happened. And what happened was like the spot and the futures got like majorly disconnected, and then pretty instantly that was arbitraged, and it was right back in a range, but still higher than where it started. See what I mean? So it's like there's a lot of financialization, and when you have that financialization, things don't move the way like nickel moved. It just doesn't work that way. It's like if the corn market had no financialization to it, the corn prices would be wild. Like you would have a storm that would come and the corn would be like, 4 times the price.
Right.
So it's highly financialized, and so these like bizarre accident type things are not as common. Now, if you go into other markets, like markets that are less liquid and less financialized, that is possible, but it's not possible with gold. And I just don't see how we wake up one day and it's that high, because there's too many functions going on. It's just not, I don't know, I'm like really close to that world.
Okay.
There's futures, there's options on futures, there's hedging, there's all these different things happening that are all hedged against each other. It's very complicated. And so to think that's all going to break down and you go down to like trading off the physical, I don't know if it's possible. Mm-hmm. Okay. But now Bitcoin's not quite that sophisticated. So basically with Bitcoin, you do have some derivative products, but you don't have the depth that you have with gold. I think slowly you'll have the depth with that. But the question is, at less than $1 trillion, how much money could come into this? Because what we know is that, we talked about earlier, is that numbers get bigger, okay? So like that debt pile number is getting bigger, all right? So when I sit down with you in 2030, that debt pile number, I don't know if it'll be 400 trillion or 500 trillion, but it'll be bigger. Like the US debt doubles under every 8-year presidential term. It doesn't matter if it's split between two parties. It's like every 8 years, the debt doubles. So 2016, before Trump was elected, it was 16, I think 16 or 18. Anyway, it's like 34 now. It's the same difference. Like it's been 7.5 years or something.
Right.
It's almost doubled. Right. So like these numbers get bigger, and so they're going to get bigger. So the gold number is going to get a little bit bigger, but the Bitcoin number is going to get, think about this, 250,000 for a Bitcoin, okay, is like roughly trillion.
Yeah.
Against the backdrop of 30 trillion gold and 400 trillion total debt.
How high is it going to go?
Well, that's too complicated, because it's too many factors. Like I think we have FedCoin at some point, and I think then it becomes, where does it fit in that? Like Bitcoin doesn't become FedCoin.
No.
But I think when you look at a portfolio like the trust, like it would be irresponsible of me to not have exposure. And then exposure means like 3% or something.
Right.
And I'm like listening to these people's comments, and they're like, I don't even know what this lingo is they're talking about. I'm like, you guys don't get it. Like, you got to own this stuff. You just got to own it. You just own it. You pick your way to own it that you feel good about. Right. Like, I don't want to have Bitcoin on a stick in a safe because there's custodial issues, but that's just me.
Totally.
Like,
well,
anyway.
I guess that's why this ETF market kind of came to fruition.
Makes sense.
Yeah.
I mean, come on. It's like, it's so easy. Like, you can buy it straight off of Robinhood instead of, look what that did to the stock market.
Totally.
When you could buy for your phone for zero, things went nuts. I just think that it's in an uptrend. And
we saw the price come off, but you're also watching the inflows.
It's normal, by the way. You buy the rumor, sell the fact. Yeah. It's always like that. Yeah. But it doesn't really matter. It's like you're not really trading it. Yeah. See, this gets back to the whole fundamental philosophical problem I have with the Bitcoin community. It's like, I didn't say anything about trading it.
Right.
Like gold. Like, okay, when we bought the gold position, like we're just like up right now. Like every year we're up a little bit. Mm-hmm. We didn't buy it to trade. We're not like, we're just moving a lot, right? Like we could trade 1% moves like almost every day, but that's not really what we do. Right. We want exposure to things that are going up.
So looking at that, then, when you start to look at the longer term picture, and you're not, trying to trade it in a day or a month or anything else. When you're talking about gold and thinking 5,000, and we're watching, U.S. debt crisis, and we have de-dollarization happening everywhere. Where does this then take us? Is this a long-term play? We got halving coming up in April.
That's a big deal. Yeah, that's a big deal. And then that continues to happen. I don't know that it matters though. Right. And the Bitcoin people, like they start like throwing their squishy balls at me and stuff. I'm like, guys, look at the chart. Look at the chart. Look at the fact that a lot of these coins are lost. they're lost.
Yeah.
Okay, I mean, there's amazing stories online about the people losing huge amounts of the coins. A lot of them are locked in big wallets, and then you just think, I mean, this world money situation is just growing like crazy. These people say de-dollarization, but I don't see it. I mean, where are you going to go? Like, what are you going to own? I mean, Thai baht or something? It's like, it doesn't make any sense. And plus, the U.S. is going to defend that like crazy.
There's a lot of BRICS chat, but it almost seems narrative.
Look, it's a real thing, but to think that tomorrow, you know, the Belt Road kind of like system is going to become this primary system is a little bit of a stretch.
Right.
I mean, I think it's just not the number one thing to think about. It's just a factor, but it's not like the primary driving force. I think you need exposure to these growing markets. And you know, like we did chips last year, and you look at the chip stocks. I mean, it's crazy. I mean, they're fundamental uptrends. They have like fundamental reasons why they almost can't lose, and they're like deeper than some narrative or some idea and all that stuff. So I think you need exposure to these types of events, because what you're trying to do is wake up in 2030 and be living a great life. Right. You're not trying to wake up in 2030 like locked on an island somewhere, living this like you know where you're so rich you have your own seed bank. You don't need to do that. Right. You're trying to progressively move to a life with lowering the hassle factor and increasing the joy. And so when you're thinking about like that, you know, it's like, let me position to where I'm going to win. A lot of things are going to change. I mean, by 2030, I think Fed coin will be a factor, and it's like, it's a total game changer. I mean, these things are like fundamental shifts, but we'll be all right. We'll make it.
I'm curious when you look to the equities market, particularly in the U.S. I mean, we talked about it just briefly, but AI, NVIDIA, we got these chips forming. Yeah. A lot of analysts think that this is going to be the future. I mean, S&P is still at highs.
New high.
But are we going after commodities, or are we going after technology? Is this a new tech boom?
Look, it's crazy, because what happens, a lot of people don't know this, but like all these hedge funds, they don't really buy any stock. What they do is they get synthetic positions tied to these things, and then that feeds off of each other. That guy, Bill Hwang, got all this trouble with but what this guy was doing is the same thing the other funds do. He just got a little out of control. But then they have to hedge that position, and so the thing, like, it's like it feeds in this upward sloping vortex. And then you have a company like a Hershey or something that we mentioned, or in the newsletter, we own this like grocery stock that's up, I don't know, 50% in the last year. And people don't get it. I'm like, these guys, they may have like 12% return on invested capital. It's crazy. And nobody cares about that. And so it's very weird where you get this like bifurcation of return outcomes. Right. And you have to really ask yourself, like, I think you just got to own both. I think their portfolio has got to have a place for things that are a narrative push, and then have a place for things that are just like super profitable, can't live without them. And I really think you have to have one foot in each of those piles, because it's too hard to try to predict that, you're going to go anything in life one way or the other is really hard. Yeah. Like, extremes don't tend to lead to like great outcomes. They do sometimes. People write books about them, but like, I don't think it's their game.
But gold by 2030.
I think if you don't have any gold, you're crazy. I mean, you look at what's going on in the U.S. They're reducing the Fed balance sheet. They'll get it to 7, and they'll have to turn and shoot it higher. It's going to get bigger. I mean, it always gets bigger. It was $400 billion in the mid-90s, and now you got to $9 trillion. Now it's 7.5. The Treasury debt was $4 trillion back then in the Clinton years, and now is 35 roughly or something.
How bad is the investor in the U.S. right now? Like, when you look at it,
they're so weird. They're like, there's nothing really to play for them. So, but they're still kind of positive, but nothing's really moving.
Interesting.
It's weird. It's like what it's like is you're just kind of like those ships in the harbor that they can't dock, but they can't leave. So they just burn out the fuel until there's nothing left.
So that's it.
Yeah. Then what happens? They need a tugboat. So I mean, I think you just need to think about it like the Fed is trying to remove the pandemic emergency money, which was $2.2 trillion. When I follow the repo market, they've removed 1.5 roughly. So they have like $600 billion to go, and they're removing 90 a month. Right. They publish all this stuff, by the way. Richmond Fed has a paper when they started it explaining what they're going to do. Nobody reads it, but it tells you what they're going to do, and they're doing it.
Do you think the rates will ever go below the 2% again?
No, I don't think so. No. I don't think they have to. I mean, what happened here is they jacked the rate up overnight. I think the same time they started this repo game to suck the money out, letting the treasuries roll off as they matured, mortgage-backed as well. And so I don't think the rates really matter anymore, because if you look, like the 10-year, is like below 4, and then the 2 is, like 150 basis points below the Fed rate.
Right.
It's really weird. So I don't know. It just doesn't make any sense. And so I think, like, once they're done pulling out what they want to pull out, I think they'll kind of normalize that. And so what I would watch, if you're like into this, is I would watch when that inversion starts to reverse. Like, that's typically when recession shows up. That's typically when Fed action is being predicted. And so if you watch that really closely, you get a heads up.
A lot of people saying we're in a recession now.
Definitely. This business is slow for average stores. People are cutting back. A little bit. It's not like a depression, but they're like a little unsure about this and that, and maybe I don't need that employee, and so that's already happening. But yeah, I think you watch that inversion reverse, which is what's going on. It tells you, and I really think that time is like March, April. I think that's the time, because that's at 90 billion a month. You're down to like 250 billion left in the repo. It's getting close. And you don't need to time it to the day. You just kind of like stay out of the way, because things will kind of rattle a little bit, and then you'll see the new. Then you got the election coming.
The little flip over in the economy.
Well, what the Fed is has expert PR team. So like what they do is they send all those speakers out now, all the Fed governors, and they speak, and then they time that with headlines like, Bostic says no more rate hikes, and Cleveland Fed president says maybe one more rate hike, and then New York Fed says, well, it's ridiculous. And if you write all these things down, it's like, it's obvious that they're trying to keep you a little bit. The market shoots. If you watch the futures, they explode, and then they're down. Yeah, it's like boom, 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 boom. This is great for trading if you want to do this all the time, but I don't recommend it, because it'll drive you insane.
Yeah.
So
but in that long term, with the lower evaluations, we're not in a bad place here, potentially.
I don't think so, except for the problem is, like, this market where you and I are sitting this is like, the beginning of the stream type thing. This is like the area where it's very sensitive, and when it's this dry, when your broker wants to split the lunch check, you can tell that, like, it's not really a mania.
It's not here.
It's a long way from mania.
Interesting times.
Yeah.
Well, we're going to have to catch you up next time you're in town.
Sure.
I appreciate your time. I know you got lots and lots of things to do. E.B. Tucker Letter, thanks, man.
Thanks so much.
I appreciate you coming on.
Okay.
And thank you for watching. We'll see you next time on Kitco. Don't forget to subscribe to our channel for the latest breaking news.
Kitco News special coverage of the Vancouver Resource Investment Conference is brought to you by Snowline Gold.